All right, today we're going to go on a little journey, the modern investor's journey. We're going to see how you can go from having just a little spare change to building some serious wealth. And we'll explore how today's tools can help you build your financial future, starting with a really simple question.
So let's just kick things off with this one big question. Can you really build wealth with just 10 rupees a day? The kind of money you might not even think twice about spending. The answer, well, it might just surprise you. And this is where our journey really begins. The idea behind this is something called micro-investing. And it's this super simple but honestly powerful idea of investing tiny amounts of money, but doing it regularly. For instance, a lot of apps today can take the spare change from your daily UPI payments. So you buy something for 93 rupees, the app automatically rounds it up to 100, and boom, that extra 7 rupees gets invested for you. It's investing without even feeling the pinch. And honestly, the appeal here is so obvious. First off, the whole idea that you need a lot of money to invest, that's gone. You can start with just 10 rupees. How cool is that? This is absolutely perfect for students, or really anyone just starting to earn, because it builds that crucial habit of investing. Plus, it's all automated through your digital payments, so the whole process is completely effortless. Okay, so you've decided to start. Awesome. But pretty quickly, you're going to hit your first big crossroads, a major decision point where you have to choose your path forward. Do you take the super popular path of digital gold? Or do you go for something a bit more structured, like a systematic investment plan, what we all call an SIP? Now, even with an SIP, you've got choices. On one hand, you could try to pick individual stocks yourself, but that takes a lot of market knowledge, and it's definitely higher risk. Or you can go with a mutual fund SIP. Think of it like this. A professional is managing a whole basket of different investments for you. For most people starting out, this is a way better option because it spreads out the risk. It's the ideal starting point. Okay, but hold on a second. Before we get too carried away, there is a massive warning we have to talk about. Because in this new world of super easy investing, not everything that glitters is, well, gold. There are some hidden dangers we really need to shine a light on. Yep, with one of the most popular, most accessible micro-investing products out there, the one a ton of people start with, there's a pretty big catch, and it's one you really need to be aware of. And here's the bombshell. And look, this isn't just my opinion. This is a direct warning from the Securities and Exchange Board of India, SEBI. They've put it out there, plain and simple. Digital gold is completely unregulated, and that creates some serious risks for you, the consumer. So the convenience? It comes at a potentially very high price. So what does unregulated actually mean for you and your money? Well, it means there's no big watchdog like SEBI or the RBI looking out for you. It means, and this is scary, if the company you bought it from goes bust, your gold could just vanish. Plus, there are often all these hidden fees for storage, delivery, you name it, that just eat away at your profits. And maybe the worst part? You have very little legal protection if something goes wrong. But the good news is, SEBI doesn't just leave us with a warning. They actually point us to much safer regulated options. Things like sovereign gold bonds. These are actually backed by the government, so they're super safe. Or gold ETFs, which you can trade on the stock market just like a regular share. These are the paths that give you security and protection. Okay, so you might be thinking, regulated sounds complicated, right? But that's not the case anymore, not at all. Getting set up is just a simple, one-time online process called KYC, or Know Your Customer. It's literally just a few clicks. Upload a few things, do a quick e-sign with an OTP, and you're done. Ready to invest the safe way. All right, so now that we're on the safe, regulated path, let's talk about the reward. The really good part. This is where it gets incredibly exciting because we're about to unlock the amazing power of compounding. You've probably heard this quote attributed to Einstein, and it just says it all. Compounding is basically your money making its own money. It's the returns you earn generating their own returns over and over again. It starts off slow, you might not even notice it, but give it time and it becomes this unstoppable snowball of wealth. Okay, let's look at some real numbers, because this is where it gets wild. Say you invest 10,000 rupees a month. After 5 years, your 6 lakh investment is already worth almost 8 lakhs. Nice. But look what happens as time goes on. 10 years in, you've almost doubled your money. And then, check this out. After 20 years, the 24 lakhs you put in has exploded to over 1 crore. That's not straight line growth, that's exponential. And this chart just shows the magic perfectly. Over those 20 years, you invested 24 lakhs, but the returns, the money your money made for you, is a massive 77.5 lakhs. Get this, that means more than 3/4 of your final wealth came from compounding, not from you saving more, but from your money working for you. That's the reward.
Let's just pause for a second and look at that number. 1 crore, 1 lakh, and 50,000 rupees. This isn't some fantasy, this is the real tangible potential of starting a systematic plan, staying on the right path, and just letting time and compounding do their thing. So after this whole journey, what's the big takeaway? What's the bottom line for you, the modern investor who wants to build a path to wealth? It really boils down to a super simple 4-step playbook. Number 1, start small. It's totally fine. Use microinvesting just to get yourself in the game. Number 2, build the habit. This is the most important part. Consistency is king. 3, scale up. As you start earning more, bump up that SIP amount. And number 4, and this is non-negotiable, always, always stay on the regulated path. Protect yourself. And that really brings us to the core message of everything we've talked about today. Look, starting is great. It's the first step. But the real secret, the key to building serious wealth, is all about being consistent and having the commitment to increase your investments as you grow in your life. And so, now the ball's in your court. Your journey can literally start today with 1 rupee and 1 decision. Now that you know the different paths, you know about the dangers, and you've seen the incredible reward at the end, which path are you going to choose?